Kelsey, welcome back to the show. Thank you for being here.
Thank you.
So for anybody who is new to the show, Kelsey is our lead account manager here at Kickstart Accounting Inc. And so she is a wealth of knowledge in helping small business owners understand their numbers so that you can make the best business decisions. So you have not just my expertise, but both of our expertise so we can go into these topics deeper. So today we are going to be talking about the 3 numbers that every business needs to know. And we really wanted to keep this really simple. So I actually did a little bit of research and I wanted to keep this in here because I thought it was funny. I had no idea. So if you've heard the acronym KISS, K-I-S-S, and you know, some people say keep it simple, stupid. Some people are a little bit nicer, keep it simple, sister. But I thought this was interesting that it's really an acronym for keep it simple, stupid. That's where it came from. And it's a design principle noted by the US Navy in 1960. And it's really a principle that states that most systems work best if they are kept simple rather than made complicated. Therefore, simplicity should be a key goal in design, and unnecessary complexity should be avoided at all costs. So directly from Wikipedia, but I thought that that was a really interesting way of thinking about keeping it simple. In today's world, I think we want to have the leg up, right? Or do something a little bit different than every other business owner. And if we are able to look at things a little bit different or tweak our systems, tweak our processes, we'll be bigger, better, or different from our competitors and other business owners. But maybe we need to keep it really simple when we're looking at our numbers so that it allows us to really actually use the information and forget all the complexity, forget all the complicated KPIs and fancy documents, and really keep it simple.
That's right. I know even I'm guilty. Let's just do this one more thing and it will be that much better. But this is really just about bringing it back to basics.
Yeah, back to basics. I love the idea that when we can keep on practicing the basics, we can become the experts. And it's not the fancy moves, it's not the fancy tools. It's really the basics that are going to help us see the biggest results. It's going to help us notice the trends. It's going to help us not get confused. So Kelsey, what are the mysterious 3 numbers? Let's go through them and then we'll dive into each one.
Drum roll, please. The first one is gross profit. All right. And then we're going to go into net profit. And the third one is average monthly cash output. All right. Let's dive into each one.
That was a ton of accounting words. I have no idea what you said.
Don't worry, we've got you.
Yeah. We're going to break down each one in detail. So our first one is gross profit. So when we think about how to calculate gross profit, I want to be really clear that this is a number that you can get directly out of your accounting system. So I'm not asking you to make another fancy calculation, or please don't use the excuse, I'm not good at math. There's nothing that you need to do. Right? So you're going to go into your accounting system and you are going to run your profit and loss by month, preferably for the last 12 months. So you might have it for only 3 months, 6 months. You might have it for 2 years, but I'd really like for you to look at it in the last 12 months. And you can really get this for both of these numbers. So Kelsey, walk us through, how does QuickBooks actually calculate the gross profit, and how can we make sure that our QuickBooks is set up in a way that's going to allow us to calculate this?
That's right. So gross profit is really just made up your gross income minus any direct costs associated with your product or service. So there is a line item on your profit and loss statement that says gross profit, and it's just right there below income minus cost of goods sold, which is those direct costs that I talked about. And that will give you your gross profit.
So a lot of people will say to me, there's a lot of confusion on what's direct costs. So what should be up in cost of goods sold and what should be down in operating expenses. And I want to give you just like some very clear boundaries for each. And you might be working with a business coach or a consultant who sees this a little bit differently. So direct costs are anything that you need in order to be able to sell or serve your clients. So any inventory that you need to buy buy from another vendor or anyone that you need to pay in order to be able to deliver that goods or service. Don't forget packaging, shipping, and then anybody to actually package your material or actually deliver your service. Anything I'm missing?
I'm just going to elaborate a little bit. It's easier to differentiate what is a direct cost versus what is an operating cost, which is those costs necessary to keep the business going. With a product-based business, it gets a little muddy with the service-based businesses, especially when it comes to labor. So if you have, some administrative staff, maybe a virtual assistant, that is going to go down in your operating expenses, not as a direct cost, not as cost of goods sold. If you're going to put labor in cost of goods sold, it's going to be someone working directly with the client, directly delivering your service.
Yeah, that's a really good point. Thanks for bringing that up. One other thing I'll mention on that is how much time and effort do we put into categorizing this? So when we work with a lot of our clients, a lot of small business owners, Kelsey knows, we wear
I'm over here nodding my head like, yep, I know exactly where this is going.
We wear all the hats in a small business. Our clients and their team members wear a lot of hats, and that's great, right? That is what we want. However, I don't want you spending a lot of time and energy saying, well, employee A spent 30% of their time with clients, 30% in marketing, and 30% as an assistant. It's really important to choose the majority. So if a majority of their time is client service, then it can be direct labor. And if a majority of their time is spent in the back end of your business, so running the operations, then we want to consider them an operating expense.
That's right. It's important to note that whether it's a direct service cost or an operating cost on your books does not affect your bottom line.
Yeah. All right. So gross profit, that's how you calculate it, right? So gross revenue minus your direct costs, again, comes straight out of your accounting software. But if you don't have an accounting software, I want you to be able to get to the number still. You're going to look at that number for the last 12 months and you're going to track it in the future. But Kelsey, what can this number tell you, right? So when we look at this number and reflect on it over the last 12 months, what can someone actually do with that?
Well, there's a couple of things we want to track. One, what is our gross profit compared to those direct costs? So if our gross profit is 30%, that doesn't give you a lot of wiggle room for your operating expenses. So your direct costs are probably a little higher than they should be for what would be considered a healthy business. And that would be a great area of focus, an area of improvement to work on. Another is trends in gross profit. Is your gross profit decreasing as time goes on, or is it increasing? Obviously, you want it to be, increasing as time goes on, as you really refine the direct costs that go into selling your product or service.
Unless it's increasing because you're doing more.
Very true. There's seasons of your business and there's, reasons why some things are the way that some of the trends are the way that they are. So just being able to recognize that and being able to find the source of that will tell you whether that is an acceptable increase or whether it's something to work on.
Yeah, these are data points. So I really like to think of all of these numbers as data points that you can then reflect on. If you have a seasonality where your costs are going up, you can start to ask yourself why. And if they're going down, you can ask yourself why, right? So it's not always good or bad. It might be that you're working too much in the business and not getting enough of that support. And that's why costs are low. It might be that you finally got the help that you needed. And this is the new normal and we need to give it time. So that's why we're going backwards. We're going to look at the seasons and then we're going to keep tracking this in the future so it can help us see into the future, right? Then we're going to use these numbers to actually see into the future.
That's right. So by doing this analysis, you have the metrics. And then it's analyzing those that gives you the information that you need to, decide what your best next action is.
All right. Net profit. This, I don't know why. This one's kind of my favorite, but I think it's because you hear me talk about profitability all the time. And in order for us to have healthy, sustainable businesses, we have to be profitable. We cannot take a loss month over month. We have to be able to be profitable in order to be able to be in business for the long haul. And I want you to be in business for the long haul. And if you decide that you want to sell your business at some point in the future, these are the types of metrics that somebody is going to look at to see, is this business viable, right? Can this business continue on and move forward? So the net profit again, you can use your accounting software. You're going to run that same report. So you don't have to run anything new. It's the same report. You're going to zip all the way to the bottom. It's the very last line of your income statement. And this calculation, if you're doing it on your own, is going to be a little bit more complex because you're going to take your gross profit and then you're going to minus all of your operating expenses. So everything else it costs you to run your business. So this one might be a little bit harder to actually calculate inside the system. Do you agree?
Definitely. There's just a lot more that goes into it for sure.
Yeah. Yeah. So this net profit, you're going to look at it for the last 12 months. Kelsey, what do you think has been some of the best revelations that you've seen from clients when they start to look at their profitability over time?
Well, profitability is kind of the end all be all for the health of your business. You know, you can have extremely high direct costs, yet extremely low operating expenses and have a healthy net profit, and voila, you have a healthy business. So, you know, I would say stop focusing so much on the top line revenue and more on profitability. It is possible, while I don't think it's the norm, it is possible to have a very straight line income. But if you are, like I mentioned before, refining your expenses, whether they're direct, operating, all of that, and reducing those, you can still take home more.
Absolutely. Yeah. You know, I think when I look at we call them narratives. So all of our clients at the end of the month, they get all of their financial reports and we give them a highlight reel or a narrative. So it's basically just pointing out to them, you know, in a simple way, okay, business owner, this is the numbers that you need to pay attention to. Here are some of the fluctuations that need your attention. And when I look at the way we do our narratives and when we're working with our team, one thing that we talk about is if we have a loss, we need to look at why, right? So this is the number that you use to gauge all of your other decisions. So if you're trending towards a loss or you have a loss, it is an opportunity for you as the CEO to understand why you have the loss. And if you are profitable, time out, like celebrate, right? So we need to celebrate first, and then we need to reflect on what's working. So on the months that are really profitable, is this a fluke? Is this a timing of an invoice? Is this a trend that we can expect to continue to replicate itself? And therefore we can pay ourselves more, we can pay our team more, we can start to add on staff members. So both directions, whether it's a profit or a loss, it's an opportunity to reflect on, is this a fluke, right? Is this a one-time situation or is it a trend and we need to start to spot it?
That's right. Recognizing those trends is really important. Because if you notice that, hey, over the last 6 months, my net profit has really started to increase. What did I do differently in those 6 months that I can really hone in on?
We'll get back to the show in 1 second, but real quick, are you an entrepreneur or business owner struggling with the complexity of tax deductions and salary structures for yourself? It's common to feel lost in the maze of tax regulations and unsure about how to effectively pay yourself from your business. Navigating these challenges can be daunting, leaving you with more questions than answers. But what if there's a way to simplify this process, ensuring you maximize your deductions and set up the most beneficial compensation strategy for yourself? That's exactly what our guide on the top tax deductions for every business owner and how to pay yourself as a business owner are for. These resources are designed to demystify the essentials, helping you understand and leverage tax deductions and outline a clear, effective strategy for your salary as a business owner. Through these guides, you'll learn the key deductions you shouldn't miss, strategies for tax-efficient salary and owner's draws, and much more, ensuring you're financially optimized and compliant. So if you're ready to take control of your financial health with confidence, head over to kickstartaccountinginc.com/gift or click the link in the show notes and download your free resources today. Okay, back to the show.
And hopefully you're talking to your money team and they're asking you these types of coaching questions. So I see you have this profit. What worked? If not, I want you to ask yourself those coaching questions, right? You can say, wow, this profit feels really good, or I'm exhausted, right? I might be profitable, but I am wiped. This is not sustainable. And then you can determine your next steps. I'm really excited about this last one because it's something that we talk about internally a lot, but we don't talk about on the podcast very often. So this is the average monthly cash output. We're going to talk about a few different places to find this number, but Kelsey, walk us through what is the monthly cash output?
Yeah. So it's comprised of a few things. So basically what we're trying to do is we're trying to estimate how much does your business spend on everything throughout that month. So that will be your direct costs. So your cost of goods sold, that will be your operating expenses, but sometimes that's not all that your business spends money on. There are other things that don't show up on the profit and loss statements that the business spends money on, like paying yourself an owner's draws. That is not on the profit and loss statement, but it's something that the business has to pay for. If you have any loans, that is not on the profit and loss statement, but it's cash out for your business. Lines of credit, if you're paying down a credit card, that is cash out that is not captured on the profit and loss statement.
Yeah, I think we forget about that. It's easy for us to look at the income statement and calculate the averages. So on average, I'm spending X amount and just direct costs and operating expenses, but we forget that there's a whole balance sheet, right? There's a whole nother financial report that isn't talked about as often, right? There's a lot of buzz around the words of revenue and profit and loss and income statement. So it's easy to only pay attention to that report. But this average cash output actually helps you determine what's going towards the balance sheet. So you can download directly at kickstartaccountinginc.com/3numbers to download the worksheet to actually calculate this with you, right? So that you have some place to actually input these numbers. Because this is a number that I really want you to have on hand. So Kelsey, what is this number going to tell us? Like, why does somebody need to know what their average cash output is?
That's right. So for cash planning, this is going to be really important. And for calculating how much you want to have in the savings. So let's say that you have a dip in activity for that month. You have a slow period, a little lull during the summer. How much do you need to have in the savings to be able to cover everything that the business needs to pay for that month? So, you might calculate, well, my average operating expenses are $5,000 a month. So I'll just have $15,000 3 months worth in the savings. Well, that doesn't take into consideration that I need to pay myself an owner's draws for those months. It doesn't take into consideration that I still have to pay down my credit card payment that month because my goal
your
that
credit
year,
card company does not care.
That's right.
They do not care. You have to have that money set aside.
That's right. And that startup loan that I got, I still have to pay for that. So making sure that we are taking into consideration all of the things that our business has to pay for and having that amount set aside so that you can really rest assured that you have the appropriate amount of a cash cushion in your savings.
Yeah. Around here at Kickstart Accounting, we like to call that our true cash balance. So it's taking your actual cash balance minus 3 months of your cash output. And that's how much cash you actually have in your bank, right? That's what you have available to spend. And once you know that amount, it can help you make all the other business decisions, right? So as you think about hiring your first employee or contractor, or you're thinking about adding on to your team, now you know this is how much I need now. And now if I'm going to add on to that team, I need to have enough saved for maybe 3 months worth of their salary or their salary plus any of the onboarding costs. And if you're not sure about that, we have an episode on how to budget when you are thinking about hiring so that you know how much to set aside in the savings account. So this number allows you to confidently make any other business decisions because you know that you have the money, right? That's one of the things that we hear from our clients all the time. I feel anxious about hiring because I don't know if I have enough. This allows you to have that confidence.
That's right. And I'm glad you brought up about budgeting because this is a forgotten portion of a lot of budgets. I've heard so many newer clients say, I made a budget last year, but for some reason, I just don't have the cash that I thought I would. They did not think about all of the items that are not on the profit and loss statement that they need to pay for.
Absolutely. So now that we know what numbers we need, how often do we look at these?
As with anything, I would say a minimum of monthly.
Yeah. I think our best case scenario with our clients is monthly. If you're keeping your QuickBooks up on a weekly basis, you could pull them weekly. However, I think that this type of number calculation is a better fit for a monthly or quarterly review. And this doesn't have to be a fancy review process, right? But we do need to have this time set aside in our calendar. I love when our clients use us as an accountability partner. So a lot of our clients will book their time with their accounting team, so their bookkeeper, their account manager, and have that time set aside. And during that time, this is when they look at the last 12 months, they reflect on these numbers, and we're able to walk them through some of those coaching questions. So know what you need for accountability. Is it that you need a money team in which you can meet with on a monthly basis? Do you need to have that time set aside in your calendar where you're having that CEO time? I really would recommend you do the books at a different time than when you analyze it, because a lot of us will update QuickBooks and then think, okay, I spent so much time doing that. My job's done. Well, no, now your job just started. So, maybe make these two different activities if you're doing your own DIY bookkeeping, where your bookkeeping is done at one point and your analysis is done at another time.
That's right. And I do want to add on to that a little bit. So the reason why I say monthly is it allows you to keep a closer eye on the trends before 3 months have already gone by. So while quarterly is, okay, obviously as often as you are able to, but if you see something that was a drastic change month to month, so if you look at your last month's numbers and you're like, wow, my net profit really decreased compared to the last 2 months, I'm going to keep an eye on that for next month. And if it happens again, now you know, okay, what is going on here? I need to take a closer look at this without having 3 months go by.
Yeah, we don't want to wait 3 months or, an entire tax year where we can't reflect on it, right? It's too late to do anything about it. So that's a really good point. Thank you. Any other common mistakes that we can think of that business owners are making when they're looking at these numbers?
Well, we've talked about this a little bit, but I would say one of the biggest common mistakes is doing the bookkeeping and not taking that time to do the analysis. Having the numbers is just step one. Step two is, what are these numbers telling me? And then another mistake is not taking appropriate action.
Yeah. Understanding what is happening and then removing some of the emotion from that. I talk about this a lot because I think it's really important. When I worked as a CFO, I reported a lot of these, these are numbers that I used in my deck that went to investors and the board of directors and management team. When we looked at them, we pulled away all of the emotion. We looked at the facts. We said, what are the numbers? What can we pull from the numbers? What is the information that we are gathering? And then we made these decisions. Now, not to say that there's no emotion ever, right? Because then we said, does this make sense, right? We're not ruthless. We're not letting people go and terminating contracts because it's not completely removing emotion, but it's having the ability to say, as a business owner, what am I looking at? Let me look at the data. Let me look at the quantifiable results and then make the decision. And then do a gut check, right? Is this the right move emotionally for me as well? So it's removing the emotion from that original decision. These are the basic numbers, right? So these are the three that if you don't know where to start, these are the three numbers that you can use right now to go get started. I truly believe that action creates momentum. I'd love the saying, if you want something done, give it to a busy person. I say it all the time. Unfortunately, my family and my friends know that as well. And I'm very busy.
From now on, I'm always busy. Sorry.
Yeah, right. Need to learn the word no. However, when we can start to take action, we are going to get comfortable with these basic numbers and we are going to get comfortable with understanding and reflecting on these numbers. All right. So when you're ready for more, I want you to go back and listen to an episode we did at the beginning of the year where we talked about setting intentions for the year. So this isn't goal setting. I'm not saying go set goals and then find the metrics. I'm saying look at what your intention is for your business this year. And that's understanding what season of the business are you in? Are you in a space where you are looking for hockey stick growth and you're really investing a lot of money into your business? When you understand that, you can find other key performance indicators that are going to help you measure and manage that season of your business. If you're in a season where you are trying to have more of a work-life balance and you want to have dinner with your kids a few days a week, the KPI might be number of dinners per week, or maybe you're focusing on yourself, right? So maybe this is the year that you said, I've poured literally my entire heart and soul into this business. And so I need to get my health back on track. So your KPI might be number of days where you slept well, went to the gym, right? So other priorities. Now, there is a website called 1001 KPIs every business owner should know. And please, for the love of God, do not ever know 1001 KPIs about your business. It is not necessary. However, you can pull 3 to 5 other KPIs that are going to help you manage and measure the season of business that you're in.
We hope this was helpful for you. We hope you learned a little something, and we hope that you'll take action and really start to track these 3 numbers. All we want is for your business to thrive, and we just want to give you the tools to make that happen.
Absolutely. If you need help understanding this information or you have questions, come to kickstartaccountinginc.com/book a call. You can talk to Kelsey and I directly. Again, if you would like to download the worksheet, it's kickstartaccountinginc.com/3 numbers. And it's the number 3 and then the word numbers spelled out. We would love to hear from you. Please rate, review, and subscribe. We'll continue to show up to be a resource for you. And we ask for one thing in return, and that's for you to share this episode with one other entrepreneur who you know needs this information. All right, until next time. Kelsey, thank you for being here.
Thank you.
I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.